Welcome to Buy, Hold, Sell. My name's James Marley and today I'm joined by Oscar Oberg from Wilson Asset Management and James Dougherty from Lennox. We're talking about small cap technology stocks. They ripped higher during August reporting. They're the talk of the town. I believe it's just 4 stocks accounted for nearly 60% of the performance in the small ords during August. James, I'll start with you. Aussie investors, we tend to be a little bit sceptical about investing in technology companies. What's your general assessment, or what's your view on how to approach investing in the tech sector?
Yeah, look, I think skepticism is probably not a bad mindset to approach any investment in a technology company. It's a very, very competitive space. So yes, the business models generally have large operating leverage, and that can generate extraordinary returns for investors. But that attracts a lot of capital and a lot of competition to the space. So for us, skepticism is good, and then the 3 key things that we look at is the technology compelling, is the market dynamics favourable, and then finally, do management and board understand what they need to do, and are they strong? Okay.
James is coming with the sceptic, the slightly cautious approach. Oscar, how about you? Do you agree with that analysis as a starting point for looking at tech stocks in Australia?
Oh, absolutely. I think you have to be a sceptic when you're looking at this sector. I think at WAM, how we approach the technology sector is to approach it like any other sector that we're looking at. We're looking for a catalyst, and we're trying to find an undervalued growth company. So I think with a lot of these stocks, given the high valuations that you see, it's very important to focus on sales growth and also market share. What you want to see is market share accelerating, and when you do, these tend to be very good investments, but at the right valuation.
Okay, so we've got the cautious view to the market, but there's been a number of stocks you almost couldn't ignore because they've become such a big part of the index, and there's been some stellar performance that's been in there. So what are the, what are sort of some of the key markers that you're looking at when you're screening out these stocks to say this is one that's quality and worthy of better investigation or further research?
I think earnings quality is a huge characteristic that you need for these stocks. And certainly there's a number of accounting tricks that these stocks can play, and whether it be extending the life of software assets to reduce your amortization expense, or capitalising your research and development, which can inflate earnings. So how we look at things at WAM is we're trying to find companies that are generating very solid cash flow and also expensing the research and development. We tend to find that these are the high quality investments.
Yep. James, anything to add to that? I think what I'd throw in there is when the cash starts to come through, the opportunity disappears. You want to get onto these things early. Are there any signs that maybe give you an early indication that the company is going to be higher quality than the others in the tech space?
Yeah, look, I think so. Coming back to what I said about the 3 things that we largely assess a technology company on, we look at the quality of the technology. So do they have a clear competitive edge over some of the peers in this space? Is it easy to adopt? Does it maybe have a network effect, which means over time that those sales will become self-perpetuating, and then you get that operating leverage, which is so attractive. Then you look at the market dynamics. Again, how competitive is it? Ultimately, is the market large enough that you are going to generate an adequate return on that initial R&D investment? That's really important. And then you need the captain of the ship to understand the marketplace, to understand the business model, and they're going to ultimately maximise the value creation out of that technology.
Yep. I think it's fair to say that we're looking at these stocks on a different valuation scale to just about everything else that's taking place in the market. What are the valuation hurdles, or do the traditional metrics like your PEs and that sort of stuff go out the window? How do you reconcile that?
Yeah, look, I think you still need to be disciplined with valuation. Just throwing valuation metrics out of the window makes it very difficult to really understand these businesses. But near-term metrics make it difficult, provided there is a large market that they can address or that they can penetrate. So if you're using a PE, maybe use the E that is a few years in advance that's going to capture that growth, or maybe you should think about present valuing the future cash flows that this business will create as they slowly penetrate that large market. So looking a
bit further out?
Yeah, I think that's necessary with technology companies.
Oscar, anything to add to that on valuation?
Yeah, look, totally agree with James and everything he said just before. I mean, that's certainly how we look at these companies. But I think you go back to valuation, it is incredibly important for investors to monitor valuation. Otherwise, it's possible you end up with a big one or it gets swift. And I think management plays a part in that. I think you've got to follow what management are doing. Do they have plenty of skin in the game? Are they buying and selling shares? And are they continually beating expectations? I think, if you use Afterpay as an example, I think one of the things they've done very well is they've had a huge insider ownership from the key management team, and they've continually beat expectations in the market ever since they've IPO'd.
Yeah. Alrighty, well you've thrown out a couple of names there, a couple at the higher quality and a couple of train wrecks. What's your assessment of the opportunity in the tech space in Australia right now? Like, has it got better over time? Are there more opportunities than historically? How do you look at that little universe?
Oh, it's definitely gotten better, and there's no doubt we're going to see more of these companies come to the market through an IPO into the future. I think it's, again, going back to valuation and separating those companies with a true competitive advantage and those that don't have a competitive advantage. It does feel like there's a lot of companies out there who basically say that they're a technology company when in reality they're not. And so I think it's very important to investors to basically go through them and find the quality companies out there.
Yep. James, some of the companies that have been at the forefront on the technology space, they've had periods quite volatile, big run up in price, they come off a little bit. Is it part of the game now with these stocks, or part of the reality that you may have to own them and get out of them a bit more readily? How do you think about that in terms of stocks that might suit your characteristics and pass your threshold for what you're looking at in terms of characteristics, but the valuations are swinging so wildly that it's creating a volatile ride?
Yeah, sure. Look, I think it's a really good point, and what Oscar said, the opportunities for companies that we can look at are certainly expanding. There's a lot more interesting and good technology companies in the ASX listed space, but maybe investment opportunities right now are becoming a little bit limited because of those valuation hurdles, and because these things largely are overvalued across the board. So you do need to be disciplined with valuation. If you take a long-term view, then you should be able to capture the growth. If the short-term share price is capturing all the upside, then that's probably telling you something.
Yep. Alrighty, let's get down to nuts and bolts. I've asked each of you to bring along a stock, a technology stock, that you think passes your filters. James, I'll let you kick off.
Look, I think arguably one of the higher quality technology companies listed in the small cap space today is Altium. So it's there's a lot of high quality attributes of Altium, but if I could focus on one, it would be the management team. The depth and experience within divisional management and the top management is pretty impressive. Add to that, you've got a CEO, Aaron Mercanzini, who has really been at the forefront of stating or articulating a growth strategy, setting measurable, clear targets and exceeding them repeatedly. They currently have a growth strategy out to 2025, which is pretty unusual in our space. The CEO and the chairman, Sam Weiss, both have a significant investment in Altium. They're aligned with minority shareholders and they act that way.
Yeah, interesting. Oscar, your chance, can you beat that?
Well, I was actually going to say Altium as well. So, but I agree with James there. Altium, for us, consistently generate very strong cash flow, and expenses all of its R&D. It's just too expensive for us at this point in time. But if I had to name another stock that we own that we like, is Infomedia. I think the recent results been very positive for their super service division, and they've fully cycled through the loss of a contract 12 months ago. So we see a very strong pipeline for organic growth and acquisitions in that business.
Okay. Well, Aussie investors might be skeptic on technology, but it sounds like the quality is getting a little bit better down under.